Next thing we're going to be looking at, and this is one of my favorite indicators, it's really simple but really powerful. The old KISS principle, keep it simple, stupid. So one of the stories, I'm a big history buff, and back in the 1800s, they had a lot of people, with the railroads being run over by railroads. So a railroad company, yeah, and so one of the companies offered a big prize, $10,000, which was a lot of money back then, to somebody who came up with a slogan to keep people off the railroad tracks. And the winner was stop, look, and listen. Can't get any simpler than that, and it worked tremendously well. So keep it simple. So one of the challenges, one of the traders sent us before the seminar, how do we identify if support or resistance is stronger or weaker? And this is where we look at combining candles with Western signals, support or resistance. So we're going to be segueing into what I call my candlestick screener. Before we do that, let's look at this. In a bar chart, support is support is support. But now with the candlesticks, we have the advantage of analyzing the shape of the candle line to see how the market is acting as a support or resistance. So here in scenario 1 and scenario 2, is the market holding support in both scenarios? Yes. However, now by using the insights of the candles, which has a greater likelihood of rallying, scenario 1 or scenario 2? 1. Because each time the market gets to the support, it bounces either with a long lower shadow or the market opens on the low and then closes on the high. So right away we could see the advantage of adding candles that those who only look at bar charts are missing. The bar chart has the same information as the candle chart, and yes, you can mentally convert a bar chart to a candlestick chart, but why bother, right? You just press a button now. Remember, when I was doing the research, there were no candlestick charts. I had to draw them all by hand. Every one. Every market. There's no other charting path. So now we have the advantage of you press a button, you have a candlestick chart. So anyway, now with this in mind, we're going to look at the candlestick screener. And this is a subject I touched on in the Forex DVD, for those who have it. In the Forex market, we're going to look at this now for all markets. It's really simple. I really like it. And it's a way to determine how solid support or resistance area is, or in other words, the probability that the support or resistance is going to hold. And all you need to do is ask 2 simple questions. Is the market at support or resistance? And second question is, are there any reversal candle signals? That's all you need to do. Now, I may have mentioned before, I like horizontal support and resistance. How you define support and resistance might be different, but I'm not really big on angled trend lines, because if you give 10 traders a chart and ask them to make an angled trend line, they're going to have different angled trend lines, right? But if you ask them to show me the major highs and the major lows, they're all going to agree. So I really like horizontal support and resistance, and that's what I'm going to be displaying on this chart. But if you're a big believer in, Fibonacci retracements, or just another way that you define support and resistance, substitute that for my horizontal support and resistance. And then add question 2, are there any reversal signals? So let's look at this. Okay, here we have a shooting star and a high a couple of sessions ago. So the market is at a resistance area. And let me actually go back here. Let's forget about this. Okay. On that tall white candle, let's ask the 2 questions. Is the market at resistance? Yes, question 1. Question 2, on the tall white candle, are there any reversal signals yet? No. So if we're long, maybe we could think of lightening up a little bit, but I certainly would not be that nervous, because although the market is at resistance, the bulls still have a lot of control of the market. We go to the next session, same 2 questions. Is the market at resistance? Yes. Second question, are there any signs, a la the candles, the bulls are losing steam? Yes. And this is when we could think about pulling the trigger. Isn't it simple but really powerful? The idea of how the market acts what the candle signals are relaying at a support or resistance area. We're screening the candles to see what they're signaling at support or resistance. Okay, who's in control during the ascent here? During that red arrow, the bulls. Okay, now on this session here, small real body, hot on me, right? Next session, after the small real body, black wrapping around the white, bearish engulfing pattern over here. Let me just highlight, let me move the arrow over here. And the real kicker, though, is this. So we have a hot on me pattern, and to tell you the truth, if I just saw this two, I don't know if it'd be bearish enough to go short. The hot on me is just not that important a reversal signal, but certainly with a bearish engulfing pattern, I would consider it. Because here's the candlestick screener. Is the market on this first white candle over here, and although it has a bit of an upper shadow, that's not really a bearish candle. Remember on the scale and the candle progression we had, this to me would still be probably towards the bullish, maybe a little bit towards neutral area, but mainly bullish. Next session, the small real body, showing us the bullish momentum is losing steam. But the one aspect that showed the bears have really taken over was the bearish engulfing pattern. That to me would really be the sell signal. Nice risk-reward trade. Now, although this is a currency, this is a great example of why it's important to look at a chart even if you have to go back years. A question I'm asked a lot is how long is support or resistance valid? And it's good forever until the market breaks it out. Because if a market makes a new high, you could bet everybody in the world, even if they normally don't look charts, will go back as far as necessary to see the last time the market got there. So back in 07, mid-07, the pound dollar got to around $2. The last time, this is a monthly chart, the last time it was at that level was back in 1991, 1992. Okay? So you go back as far as necessary. So I have this resistance area on a monthly chart going back, 15 years, if I did the math right. What I did was I took that zone. Remember in the prior session I talked about, although we're not really focusing on intraday, how you could take a support or resistance area on a daily chart and throw it onto intraday. If you trade intraday and use an intraday candle signal to initiate a buy or sell, you could do the same concept in a longer term perspective. What I'm doing here is I'm going to take a resistance area, in this case a monthly chart, throw it onto the daily chart. Okay? So this is that long-term resistance zone from the monthly chart. With that tall white candle, is the market at resistance? Yes, right? Let's do the two questions. Second question, with that tall white candle, any reversal signals yet? No. We go the next session, we're getting a little bit of a hint. Spinning top, small real body, and the coup de grace came with bearish engulfing pattern. And for those who trade the pound dollar, remember what happened after. Okay, that was that long-term resistance area. Okay, shown by the red line. So essentially, a market that began rallying in that green semicircle on the left there in the bullish engulfing pattern stopped right at a major resistance area. We use the candlestick screener. Is the market at support or resistance? Yes. Are there any reversal signals? We didn't get the reversal signal. We got a little hint. This is actually a high wave candle. Okay, it's in one of my other educational resources. And the reason I didn't do a high wave candle here because there's nothing new I had to talk about on that. The high wave candle, the market's lost its sense of direction, small real body, but the real confirmation came with this bearish engulfing pattern. Where do you think my target would be? Bullish engulfing pattern, exactly. So the market got down to the bullish engulfing pattern over here, and essentially that's where it held support. And this has been a major support area. And in fact, we got another bullish engulfing pattern right over here. Okay, here, resistance area, candlestick screener. Is the market at resistance? Yes. Over here, is the market at resistance over here? Yes. Any reversal signals on that white candle? No. How about here? Okay. Now, this is, I'm sure you don't remember, I just remember this chart because this is one of the currencies I follow. When we were looking at the ADX, this was a high ADX number. This was like a 0.95. So the uptrend was still strong. And this is where you have to decide. You say to yourself, okay, the ADX is still in a strong uptrend, but we have a dark cloud cover at resistance. Okay, do you take the trade? I probably would. A little lighter. There's nothing that says you have to be 100% short or long on a trade. So maybe with the ADX not confirming a weakening of the trend, but you have the dark cloud cover confirming resistance, you do the trade, but a little lighter. Over here, tall white candle at resistance. We all agree there's no reversals, right? The next session and two, we're getting a hint the bulls are losing steam at resistance. Yep. And over here, this is, you could view this as an evening doji star, bearish engulfing pattern. Very simple, but really powerful. Okay, is the market at support here? Yes, right? Question one. Question two, are there any reversal candle signals yet? No. Should you go long because the market's at support? No. Maybe lighten up on shorts, but remember with the candles, we're picking tops and bottoms. We want the odds in our favor. So, and this is very common. See how the market broke under the support? Now, if you remember, one of the charts we had looked at before, we had, when we were talking about the ADX, we had the morning star, and the next session, there's a black real body at the support of the morning star, and I was saying, although it's at support, I wouldn't be buying it. That's because there was no confirmation that the bears were losing steam. The next day, when the market bounced back a little bit, we had that Hadarami pattern. That was the confirmation. So, if the market's at support or resistance and there's no reversal candle signals, I would certainly consider lightening up on positions, but to place a new trade, wouldn't do it. Just wouldn't do it. So let's review, let's go through here. We had seen this in a prior session. The doji becomes a resistance area as shown by the green horizontal line. On the blue arrow, we have a tall white candle. Is the market at resistance? Yes. Any signs the bulls are losing steam? No. I would not sell there. And once again, it's not surprising that the market had a breakout. You can think of the candles, like with this tall white candle, kind of like a broad jump. You have a strong running jump, and you're going off, and you're closing at the highs of the session, and you have strong bullish momentum. Something like this, the odds are fairly high you're going to continue moving higher the next session. If you have a doji, it's like kind of running against a brick wall. Obviously, the momentum is going to be slowing if that happens. So, in that case, the odds of a turn are much higher. So, in this session, we went over measured moves with the idea that candles do not give price targets. And to get a price target, you could, I keep it simple. I look at prior highs and lows. I also look at measured moves. We can have box range breakouts. The market's trading laterally. Whichever way the market breaks out, that's the move of the, we take the height of the move in the direction of the breakout. Head and shoulders. Head and shoulders is very, very popular. Back in the 90s, the mid-90s, the Federal Reserve Bank of New York did a study on head and shoulders. And they called the paper, and I am not making this title up. The title of the paper was "The Head and Shoulders, Not Just a Flaky Pattern." I am not making that up. Tell me the Fed doesn't have a sense of humor. And that just echoes how many traders look at technicals and head and shoulders. Fascinating. So, and actually I did a seminar for the Fed, and it was actually in New York. And I said, why am I here? And they said, because so many of the institutional traders are using candles, they want to know what the institutional traders are looking at. The candlestick screener, see if the market's at support or resistance. And second question is see if there are any reversal candles yet. And I had this cartoon made up. Okay, things were not going well until we added the Nissen candlestick screener. We're now going to move into a topic that was brought up before about sectors. So we're going to look now, this is only for equities, it's not Forex, looking at stock sectors. And we're going to also look at ETFs. So let's go through the sector part first. And we're going to be looking at sector analysis. So for those not familiar with a sector, it's there are a lot of companies, the S&P, for example, will break up organizations that they'll categorize them into major industry groups and sectors. And so that's what a sector is. Like companies are going to be within a group with similar companies. We can technically analyze the sectors as we could with other markets, drug indexes, semiconductors, and so forth. Now, we can't trade sectors. You can't buy and sell sectors. That's why we're going to be talking about ETFs before. So why are sectors important? Well, studies have shown, well, first of all, let me backstep here and go over one of the bullet points. First of all, that we can analyze sectors. Although we can't trade them, we'll talk about why it's important to look at sectors. Although we can't trade them, we can analyze them with candles just as we could with any other market. So, for example, here in the yellow box, we have a bearish engulfing pattern. Why is this, for those familiar with the evening star, why is this not an evening star? The black candle should get deeply into the white candle. Okay, we didn't talk about the evening or morning stars here because there were basic candlestick signals, really nothing new to talk about with the advanced candles. But yeah, the black candle wrapping around the white is the bearish engulfing pattern. The red horizontal lines are resistance. And although the market's moving higher here, what are these shadows showing us? Yeah, long upper shadows. This real body is not that small. These are, but the long upper shadows are showing us that the market cannot hold the highs into the close. And really, for market to really be strong, we want to see the closes near the highs of the session. And then we have a little dark cloud cover here, the black getting more than halfway into the white candle, confirming the resistance area. So this is a sector. This happens to be the bank index. And so we'd analyze it as we would any other individual market, including, whatever stocks, Forex, doesn't matter. We use the same candle signals. So why are sectors important? Because different studies have shown that anywhere from 37 to 60% of a stock's performance is affected by its sector. So we should know, if you're trading stocks, what the sector is doing. And with that in mind, we're going to be looking at sectors in two ways. We're going to be looking at bottom up. So we're going to be looking from stock to sector, and then top down from sector to stock. Okay, let's talk about bottom up first. First, we check the stock sector. Then the idea is, say the sector is strong, like say, we're looking at bank index or whatever it is, and we're trading, Citibank. So we want the bank index to be, if we're looking to buy Citibank, we ideally would like the bank index to also be strong, with that idea that a big percentage of a move of an individual security is affected by its sector. And then if we have to go counter to the sector, so let's say the bank index is moving down and we want to buy, Bank of New York. And what I would do is, if I get a bullish signal in, say, Bank of New York, I would use that to exit a trade rather than go into a new trade, because you're going counter trend. Okay? So I'll show you an example. But before I do that, let me give you Tony's site. I made reference to her yesterday in the nice quote she gave me about candles. And Tony is a real expert in sectors. A lot of the information I got in sectors was thanks to Tony. But this is her website, tonyturner.com. And she has lots of sectors and what the stocks are in each sector. So one of the things, and these are the major sectors. These are just a sample here, a little hard to see, but for example, we have the banks in the upper left, the chemicals, computer storage, and so forth. And actually what I did, I copied her page, I put into a Word document, and then you could scan. So in other words, let's say I didn't know J.P. Morgan was in the bank index. I typed in, so I had this whole page, and it goes on for lots of pages. I put it into a Word document. I type in JPY, and did a word search in Word, and it was right under the bank index. So I knew it was a bank index. So that's kind of a little hint. But Tony has a lot of stuff on sectors. Also, she has a lot of stuff on ETFs. So when I talk about ETFs, if I don't mention her site, just remember that. So let's go through here. Bottom-up sector analysis, meaning look, you have a market, you pick it however you want, a stock, and then you're thinking of buying or selling it. You look at the sector to make sure, if you're going to go in a new trade, you want to make sure the sector is in the same direction as the new trade. So here we have Amgen. Okay, remember, it's the biotech sector. And if you don't know that, again, you just copy and paste Tony's stuff. You put it on a Word document. You type in AGM, AMGN, you do a word search, and it'll come up under the biotechs. So we have Amgen here. Now, we have a falling window. There's a hammer, but there's also a falling window. Okay? So we know how much I like windows. Usually, between a window and something else, the window usually wins. Okay? So we have a bullish hammer and a bearish window. Normally, we wouldn't do a trade, but if we're thinking of selling this, let's look at the sector on the same day, the biotech sector on the same day. And what do we have over here? Bullish engulfing pattern. Is it over here? And what is it confirming? A major support area, right? Bullish engulfing pattern, a piercing pattern. So essentially, if you were thinking of selling this, selling short, you're going against the sector. A little bit more risk-oriented, you could say, okay, the sector looks like it's at a solid support area. Maybe you can think about buying the hammer, realizing, though, you're at a resistance level. All right, so that's a little riskier trade. But this would keep me out of a short position because you're going counter the sector. I used to look at options. This was going back at Merrill Lynch because, interesting story, when I left E.F. Hutton, I went over to Shearson Lehman / Hutton, and then I went over to Merrill Lynch. And Merrill, this was in the late 80s, was in a cost-cutting mode, and their option strategist left. And they needed a technical analyst, so they hired they were looking for a technical analyst / option strategist. So I taught myself options. And so when I was at Merrill, I was doing seminars. This was, before I revealed the candles. I was still doing the research. I was writing my book, but I didn't fully reveal them. So I was doing seminars on Western technicals and seminars on options. And this was going back to 1990, so I remember like zilch on options. The only thing I remember is implied, historical volatility, and just basic stuff. But interesting, when I was doing the interview at Merrill, the technical analyst there, the senior technical analyst, this was in the futures area, real comedian, an older guy, great guy. And he came in, and I'm sitting there with an interview. He put on a pair of sunglasses, and he took a cord, the hard plastic cord from the shade. He took it off, and he's coming into the office like this with the sunglasses. And he says, I'm the other technical analyst here. I said, what am I getting into here? But as I mentioned before, candles are great with options because candles can set up the opportunities, and then you shift over time, look into time decay and volatility and so forth. So, all right, so anyway, getting back to this, so I would be very wary about trying to sell this because you're going counter the sector that stock is in. And this is what happened after, and indeed the window did become resistance, right, for a while, but ultimately it did break out. Okay, actually, as the sector did also. So, and let's look at another example here. And what you could do the same thing in a lot of the platforms, including the one we were talking about, today, or yesterday, you can overlay the sector and the stock. So, here we have Amgen on the top. Do we buy it here? Now, let me show you a couple of things going on. Okay, what's that blue horizontal line? Resistance, right, because it's a window, correct? Yes. So the market closed above the top of the window. Right. Okay, so it's a bullish breakout. So we're thinking about buying it, assuming it's a good risk reward. Look at the sector, the biotech sector on the bottom. Okay, is that positive? Yeah, nothing wrong with going long Amgen because the sector looks fine. If we had this in Amgen and the sector was weak, then I'd probably use this to take profits on long positions. To go long, we want to be in the direction of the sector. If we go counter the sector, we'd use that to offset a trade, usually. Okay, and actually, this is what happened after in Amgen. This is when the market got above the falling window over here. And you actually had another opportunity because the market moved higher and it pulled back. And what other opportunity did we have to buy? Right here. Now, before buying it here, if we're doing our bottom-up sector analysis, before going long here, what would we do with the biotech sector? We'd check it, just to make sure it's still kind of in a bull mode, right? Okay, so any questions on the bottom up? Bottom up meaning we're looking at a stock, and then we go up to its sector. Yes?
If you're looking at the intraday on the stock, would you also look at the intraday on the sector?
Good question. The question is, if you're looking at intraday on a stock, would you look at the intraday on the sector? I would still actually look on the daily chart because a lot of traders, including a lot of the institutional traders I work with, that will actually look at 3 time frames. They'll look, say, example, they're trading on the daily. They'll look at an intraday, and that's why I'll look at a 30 and 60 minute. They'll trade mainly with the daily, but look at the 30 and the 60 minutes to see if there's any earlier clues, and they'll look at a weekly to get the sense of a longer-term trend. So if you're trading intraday, I would suggest looking at making your daily chart your longer-term trend chart. And with that in mind, I would still be looking at the daily sectors. Okay, now we're going to be looking at a way to use candles to filter, sectors to filter. Now, of course, we have the trade recognition software as a way to recognize candle signals. But this sector approach, a sector idea, is a really good way to pick out the potential markets out of thousands of equities to zoom in and scale in on for a more detailed analysis. So it's a 3-step target, a 3-step approach. First step, and we'll go through these individually, is we scan through the major sectors. And again, I would refer you to Tony's site, but there's probably about 10 major sectors. And I'll talk about setting up the sectors in a minute. Scan through the major sectors and find the best potentials either from the long side or the short side. Step 2, once we have the best sectors, say we find a couple of good bullish sectors, we're getting bullish candle signals, then we look at the component stocks in that sector. And then we pick the best component stocks in that sector. Then we narrow down our analysis. So let me go through this step by step. Okay, so first what we would do is set up some pages. And for example, here in the trade nav, what I did is I set up a page, a generic page with just 6 charts. And I just call this page set up 6 charts, and you can put in any markets you want. So you'll set up depending on how big your screen is or how many screens you have. So you can have a generic page, you can have 4, 6, 8, whatever it is, and you make that your template. So now you could have your sectors in here. So for example, I have I don't have sectors in here, I have individual stocks. So this is just, I'm just showing you here to set up a template. So you have this template, and then what you could do is you could set up different sectors on each of those charts. So here I would call this, I'd make this page, I didn't do this in alphabetical order, but you may have some sort of order, you may have sectors, whatever it is, you call this page sectors A to H or something like that, and then use that template again, that 6-page template, and put the other 4 or 5 sectors in. Again, there's only about 10 major sectors. So now what you've done is you have a page or 2 pages with the major sectors. So now, and whatever technical tools you like, I'm just focusing on candles now, but for some of you may like moving averages. I think Tony likes a 40-day moving average that she defines uptrends and downtrends, but we're just looking at candles now. So here, for example, we have a bunch of sectors, internets, banks, biotech, and we could scan through them either for bullish or bearish candlestick signals. And right now, what I see here is on the internets on the left, there's a hammer. Now on the bank index, we have a positive signal, but what's the problem here? It's not too far from resistance, right? So right now, yes, maybe the internet's a change of polarity, but to me, that's not a major resistance area. I'd be concerned here because it looks like we had a pretty important pivot high here. So I would probably be looking also at the banks, but certainly at the internets. All right, so you do this for the 2 pages you have. You scan through them. You might find 2 or 3 sectors that look really good. Then what we would do is use that page that you have the setup with the 6 sectors. What you're going to do is for each of these sectors, you're going to set up the pages. So, for example, this is all the component stocks in the Internet Index. Okay? So you have this 5, 6 stocks, the major stocks in that sector. You have a separate page. So you'll have a page with the sector index. You'll have Internet sector stocks. You'll have another page, bank index stocks. So what that'll allow you to do is, let me go back here, is once you find the best sectors, the potential best sectors, you now have the internets, and then you go to the page that have internets. Okay, and actually what I do now, and I don't know if I have it in a later chart, just to make it a little easier. So these are the component stocks in the in the Internet Index, but what I do now is my first chart in the component stocks is the index itself also, to make it a little easier. Okay, but this is all the Internet stocks. So we scan through them quickly, visually, and what I see here, okay, over here, and let's go through these. Okay, this is my favorite. This is Amazon. Okay. Okay, so do we have a potential positive aspect about Amazon here? Yeah, we have a rising window. Is it holding a support? Yeah, on a close. I don't know if that's quite a hammer, but it looks pretty close to it. How about on eBay? Any positive thing there? Now remember, we're looking for positive signals because the Internet Index gives us a hammer, a positive signal. So we're looking for bullish component stocks in the Internet Index. Any reason to be positive here? No. Doja, right. Here, certainly not. Over here, not really. I mean, we have a bullish engulfing pattern, but we're not quite by it. How about over here? It's near support. Now, it's near support, but are there any reversal signals? And even if there was, it may be hard to see there, but we have a gap, right? And over here, just in a neutral trading range. So of these, the one that jumps out most to me, now this is the long side. I mean, we could do the opposite on the short side here. You may be, most of us are looking to buy on equities, but for those who are comfortable selling, you could be looking for bearish. Something bearish might come out in the indexes. Anyway, but we're on the long side here. So now we've narrowed in, we've zoomed in on Amazon. Now we can focus on that and do our detailed analysis on Amazon to see, this is where we use our detailed analysis. It's holding the rising window as support. Okay, the ADX is pointing down over here, which is good, right? The ADX's slope is down. We have a rising support line we saw before. The rising window over here. I'll just draw this very quickly. The rising window is holding as support. I like Bollinger Bands. We're near the bottom of the Bollinger Bands. You could use your own Western indicators. I mean, the ones I like are ADX. I like Bollinger Bands. Obviously, I didn't put volume on here. It would have been too confusing. I would look at volume. And now you do the analysis. You also think about the risk-reward. I think this is a good trade. We have a lot of stuff going on here. We have the hammer. We have the rising window holding a support. We have a rising support line. We have a decreasing ADX. And it looks like a fairly good risk-reward because my resistance area would be up here. Okay? So this is a trade we could think about taking. And it worked out well. But the point is that what we're able to do is now we could just scan through 10 sectors, pick out the couple of sectors that really look best, probably from the long side. Then once you have those, now zero in on the stocks in that sector and pick out the best stocks in that sector. So we've essentially taken thousands of potential stock candidates and just narrowed them down very, very quickly. Okay, make sense? Okay. It's going to take a little time to set it up, though, but it's going to be well worth it. Now, for those who want to trade sectors and don't use options, a way around that is ETFs. Exchange-traded funds, and again, Tony has some great stuff on her site on ETFs, and it tracks all the major sectors and indexes. Very popular, very, very liquid, and the main thing is you can trade ETFs. So if there's any particular sectors or industry groups you want to think about trading, you can certainly trade them. So just like any other market, in fact, some of the charts we had seen before when we were talking about advanced candles, and maybe even today, were some ETFs. So here is the Merrill Lynch, one of the Merrill Lynch holders, and just use regular candle signals. Okay, the caution I would suggest with ETFs is gaps. Something like this, gaps are fine, but a lot of the ETFs are overseas markets, like the emerging markets. There's a very popular one, the EM. And the red W is a falling window, and a green W is a rising window, so you can have gaps all over the place, just as you would if you were trading ADRs. So as much as I like windows as potential support and resistance, if you're trading an ETF and you have something like this, I wouldn't place much emphasis on windows. So, okay, the big issue is what I'm calling sectors are really industry groups, all right? And because sectors is actually a higher level, but it gets really, really confusing because the sectors, well, like the bank index and all that, they're known as sectors, but they're really industry groups. And so what we're really looking at is the industry groups, but I'm using those terms synonymously. So it's really the industry groups that we're looking at, but everybody calls them sectors. So, but there is a difference, a subtle difference. So let's go through this quickly, okay? So it's important for stocks because the sector or industry group, however you want to refer to it, accounts for anywhere from a third to more than half of a stock's performance. We can analyze sectors. We can't trade them, but we can analyze them, except if we're using options. Bottom-up trading, so if you have a stock you're thinking about trading, look at the sector. Okay, that's one of the tools. That's one of the many tools. ADX was a tool. You trade stocks, look at a sector. That's one of the tools one of the things you should be looking at. Top down to filter. We scan through the industry groups, the sectors, in other words, the bank index, the semiconductors, internets, and so forth. And we pick out the best one or two, maybe three. Then we have our pages set up, so all the component stocks in that sector we can just visually scan through. And what you could actually do also, which I didn't do here, but there's nothing wrong with, I just had candles. These are the component stocks in the Internet Index. But what I would also do, again, depending on the size of the screen, you could have your ADX on here. You could have your Bollinger Bands on here. You could have your volume on here. See, what I did just to make it visually easier is I had the candles, and then my next page I did all the Western tools. But if your screen is big enough, or you want to make enough separate pages, instead of having 6 on a page, you do 4, you could have all your indicators on each of these charts. Okay, so ADX I would certainly have on there. Volume I would have on there. Okay, Bollinger Bands, I would, but the problem with Bollinger Bands, actually they work very well in indexes. From my experience, they don't work that well in a lot of individual stocks. But certainly volume, certainly ADX, and certainly candles. Okay, and then we find the best stocks in the sector, and then we zoom in to analyze the stocks in greater detail. ETFs, we can trade. It's a way to trade sectors or industry groups, and it's a great way to diversify your portfolio. So any questions on this before we move on?
So on ETFs, windows are under support.
They would be if we have, and this is true with Windows in general. The question was, on ETFs, windows aren't important. I would view them important in a market like this where you don't have many windows, and this is true whether it's an ETF or not. If you have a market, an intraday chart, an ETF, it doesn't matter. If you have a market where you have windows like this, windows aren't important because they're so frequent, whether it's an ETF or not. But the reason I wanted to mention this with the ETF, because a lot of the popular ETFs are overseas markets. We have this, we have the China ETF, these are really very popular ones. And I don't place much emphasis on windows here.